please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello, good morning and welcome. You're watching Chartbusters, the show where we highlight all the buzzing stocks of the day and get you expert advice on how to capitalize and trade on those stocks. As we speak, the market's virtually at the high point of the day, 0.5% gains both on the Sensex as well as the Nifty. I'm Mangla Malu, with me is Sumera. Sumera, good day for our markets, and as we speak coincides with the up move that we're seeing even on the Asian screen, all the indices out there at the high point of the day as we see.
Yeah, that's true actually. So looks like a good day all across. So let's get started. Here are our top stories. Well, SBI gains about 1.5% after Goldman Sachs upgrades the stock to a buy rating with a target of 396 rupees, says the bank will benefit from improving asset quality.
Arvind surges in trade up over 4% after CLSA bets big on the stock, upgrades the stock to buy and revises target to 538 per share. The brokerage expects proposed demerger of the brands and retail business to create value.
Another stock in the green is Jet Airways after the management sounds bullish in an analyst conference call, says the company saw a 7.7% capacity addition during Q2 and the net debt has declined by 190 crores. Edelweiss upgrades the stock to a buy rating from hold, raises the target to 822.
Max India tanks 4% today. The Delhi government cancels the license of Max Super Specialty Hospital in the capital's Shalimar Bagh region. Max Hospitals in a statement says the ruling is harsh and it is exploring options.
And some stocks reacting to strong second quarter earnings today include Ukal Fuel, Sharda Motors and Aegis Logistics.
All right, then let's get a quick handle on what the chart check on our markets is suggesting. The Nifty holding above that 10,300 mark. Ashwini Gujral joins in now. Ashwini, 10,300 on the Nifty. Further room for more, some more short covering coming in. The Asian markets moving high too.
See, instead of looking, where the market can go, let me talk about where it shouldn't go. It should not, in my opinion, start to break, say, Friday's high. On the Nifty future, that zone is about 10,300 thereabouts. As far as that holds on, we should be fine. Similarly, on the Bank Nifty, we shouldn't break 25,380, 400, that zone. So till that time, I think you should continue to remain long. The market is going through some consolidation, but if bears cannot take the market lower from here, chances are we will see upside also. So for the moment, Voltas is a buy with a stop of 620, target of 645. Bata is a buy with a stop of 740, target of 765. And Century Textile is a buy with a stop of 1345, target of 1400.
All right, Ashwini, thanks very much for your morning trades. The stock on our radar now is Capacite Infra. Rohit Katyal, the ED and CFO of the company, now joins us on the telephone line for more. Mr. Katyal, good morning. Thanks very much for speaking with us. We didn't get to speak with you post your Q2 numbers. It's looking good the second quarter. Your revenues are up nearly 50%. Profit as well has doubled. So my first question to you now on the full year 18. First on the top line, do you think you could add another 200-300 crores to your FY17 top line, which was in the region of about 1,100 odd crores?
Yeah, good morning. We do believe that the top line should be close to 1,400 crores. Which would ideally mean there would be an addition of about 250 to 300 crores. This is after taking into the implication of the GST regime.
All right, 1,400 crores on the top line. But Mr. Katyal, if you could tell us, a couple of things. One, how big is your order book right now? And the new orders that you're getting, what margins are you bidding for them at, given we've seen a margin decline in the first half of this year and in the previous year as well?
So you need to look at the cash profit. So there is a change in a depreciation policy which subdues the net profit a little bit. But if you look at the cash profit, that's well on track and has seen a good traction in the first half of the current financial year as opposed to the last financial year.
Mr. Katyal, I'm talking about the EBITDA margins, which does not include the depreciation. So if you could...
You're talking about the EBITDA margins. Right. I thought you were talking about the net profit. As on the EBITDA margins, we have to look at the full year. The target for the full year remains at about 14.2 to 14.3%. and the order backlog as on date is at about 5,450 crores.
Okay, 60% of your order books looks to be in that premium segment. So I just wanted a quick query of whether you're in the affordable space at all, or is that a space that interests you?
Madam, if you look at the entire order book of 5,450 crores, nearly 60% of that comes from affordable segment. The only difference is that as per the geography, the definition of affordable housing changes. In Mumbai, an affordable housing would be different as opposed to a Bangalore or a Cochin. However, answering your question, 60% of the order book does come from the affordable section.
All right, Mr. Katyal, I'll get back to the margins question itself. The first half, you've done 16.5% on the EBITDA margins front. This compares with 17.5% in the first half of the previous fiscal. Now you're telling me that 14.2 to 14.3% is what you can do for the remainder of FY18. So the margins, they have a downside risk from here on?
What you have to note is that the depreciation policy has undergone a change. So
it's the EBITDA margins that I'm talking about.
I'm just giving you a complete understanding on the subject. So if you look at last year, the site establishment was contained in the stock, all right, and which has been transferred under the Ind AS to the gross block. So that comes as a depreciation rather than a hit. So therefore, the EBITDA margins in the current financial year for the first half look at 16.2%. If you look at Ind GAAP, it would remain at the same level of 14.2%. So if you talk about Ind AS, yes, the whole year EBITDA would be at 16.3%. There is no downside from here on.
All right. And finally, before I let you go, Mr. Katyal, if you could give us a word on competition. When you bid for all these products or these projects, who exactly is competing with you, given the sort of growth that the company has seen? 2012 is where you were incorporated, and now you've done about 1,000 crores or 1,400 crores are likely to do in the next 5 years since incorporation. So are you very aggressive in bidding for these orders, and who are your competitors?
If you look at our order book, 100% of that comes from marquee private sector clients, and there is no L1 concept prima facie in the private sector. So you basically qualified on your technical competency and the timelines for completion of the project, and then it's basically more of a negotiated tender rather than the L1 basis which you see in government. Coming to the competition side, we are competing with the top level Larsen & Toubro, Shahpurji Palamji, JMC, Ahluwalia Contracts, JMC, in all the 4-5 geographies where we operate in.
All right, and is this growth trajectory likely to continue from 2012 to now? You've done about 1,400 crores in top line every year. Is this likely to continue going forward?
So we have already an order backlog of 5,450 crores, which gives you a visibility of approximately 3 years from now on, and that should basically answer your question. So we do look at a decent growth on the top line, but most importantly, the strength of the balance sheet will continue to be there.
All right, Mr. Katyal, we'll leave it at that. Thanks very much for joining in. So let's take you straight across to a very special and exclusive conversation for former Reserve Bank Governor C. Rangarajan, Y.V. Reddy, D. Subbarao and Bimal Jalan speaking on financial inclusion.
Priority sector credit continued in terms of allocation, but in terms of the loss through a lower rate of interest was avoided. Second, what we did was also that we opened up new banks. That was one other way by which we thought new players will come into the market. I must say that there was no need, Sriram, for modifying the Act. We did not modify the Act. The provision to provide, to give licenses was there. All that was happening earlier was that it was not being acted upon. And it was acted upon after many, many decades. And while we said that the new bank should go as far as possible outside.
All right, that is a very interesting discussion taking place, the big four of India's monetary policy. But talking about the big four of mid-cap FMCG stocks, all of them buzzing, Colgate, Pidilite, Godrej Consumer, all of them at the high point of the day. And talking about FMCG, we have Emami. It's forayed into the fast-growing male grooming segment with their acquisition of Helios Lifestyle. N.H. Bansali, the CFO of the group, now joins us to give us a sense of their plans for this segment going forward. Thanks a lot, Mr. Bansali, for joining in. And first up, if you could, explain to us the rationale behind this acquisition. What is the estimated market size, growth rate? You already have brands like Fair and Handsome and He, so why go ahead and get into another brand in the grooming space rather than extending your own?
Yeah. See, it's an interesting segment. If you look at, it is in the male grooming segment, which is growing very aggressively. It is in the online business, which is also the growing trend, and now the people are looking at the products online. And these are mass premium. These products are in the mass premium segment. So all the three combinations are winning of the FMCG industry. So we are investing into the trend, and we feel that it's a very good opportunity. We already have our brands kind of Fair and Handsome and also the He range of products, where we are there in the male grooming segment. But there we are catering to through the general trade and to the masses, and that we would continue to grow. This is an interesting additional business which we are investing in. And going forward, we feel that this is also a future of the FMCG industry. So it is an investment into the future.
Right. Mr. Bansali, good morning, sir. Could you take us through what could be the scalability of this business and the potential sales once your distribution kicks in?
We are not looking at doing it immediately into our distribution, so because it has its unique positioning. These are the premium products which are being sold online through own websites and also through the marketplaces, kind of Amazon, Flipkarts and all. And it caters to the mass segment where the young people look for those kind of products which they are not getting through the general trade. So we would continue, and this is a growing trade, and the market is growing very aggressively. And so we are capturing this trend, and we want to invest in this kind of opportunity.
All right, Mr. Bansali, the industry is likely to grow at around 15 to 17%. You think you can better that growth? And also, if you could tell us the price to sales multiple of this acquisition, was it single digit, low mid digit, double digit? What kind of price to sales multiple did you give?
We are investing into the business, so I think it is not relevant at what price to sales kind of a multiple we have given. It is because we are looking at the potential, so it is on the potential, and we have not disclosed any pricing at which it has been we have acquired the stake, and so we would not be able to tell you on this, but that is not important either.
All right. Thanks a lot, Mr. Bansali, for joining in and giving us all those details. Aggressive growth expectations as far as the male grooming industry is concerned. And as of now, they will not use Imami's distribution to sell this, will only sell it online. Important and interesting details coming in from Imami. But below that 10,300 mark as we speak, the Sensex as well and the mid-cap index have come off the high point of the day. What's actually dragging the markets lower are the metal stocks. The metals index is at the low point of the day, dragged lower by Vedanta as well as Tata Steel. SBI too has actually sipped from the high point of the day. So let's get in a check on the markets. What is the likely outcome of the mid-cap conference and the outlook for the markets going ahead from no other than Mr. Nilesh Shah himself. Thanks a lot, Mr. Shah, for joining in. First up, the mid-cap index itself is up about 40% this year. Individual stocks have more than doubled. Despite that, what kind of interest are you seeing in the mid-cap space, valuations notwithstanding? How are investors approaching this space now?
I think we are seeing two trends up from investor point of view. One, which is in minority, is looking at the past performance and coming into mid caps. There is second, who is looking at the longer term trend of mid caps outperforming larger caps and creating better value over a period of time despite volatility. Fortunately for us, this set of investors are in majority. They know that mid caps can create greater value over a period of time if you can spot the right opportunity, back the right management. And this Kotak Securities Mid-Cap Conference is bringing together that set of investors with 25 plus mid-cap companies. Hopefully their confluence over the next 2 days will create a better environment to understand mid-cap companies.
Right, Nilesh, good morning. I know it's not a mid-cap, but are any of your participants at the conference also discussing the Bitcoin move?
Yes, there is tremendous amount of interest in Bitcoin. And I had to regret saying that since I'm 48 years old, I'm eminently disqualified on commenting on Bitcoins. But I have one more suggestion. Instead of entering in Bitcoin at $200 billion market cap, why not we create IndieCoin? We have computational skill to develop Bitcoin equivalent program for IndieCoin. We have 40 crore plus internet users. We can create circular trading among us and excite all non-Indians to participate in IndieCoin. And maybe make this $1 to $20,000 and create a $500 billion market cap and hawk it off to all non-Indians, so that they can have their IndieCoins and we can have their dollars.
Right, so if this comes true, we'll know where the seeds of this idea were sown.
Right. So, Nilesh, as far as investing itself is concerned, how are investors approaching mid-caps as against large caps? What are the key differences when you do research as far as a mid-cap company is concerned versus a large cap? A lot of data is available in the large cap space. So how is that different?
So one, as you correctly mentioned, the information asymmetry between a large cap and mid cap varies, and which is where this kind of mid cap conference becomes very, very important. It gives a platform for 25 plus mid cap companies to meet 200 plus investors. Second, in mid cap there will be higher volatility. It will be either because of market movement or even because of business movement. A mid-cap company's ability to absorb business cyclicality is far lower than a large-cap company, and which is why it is extremely important for investors to get in touch with mid-cap management and develop the confidence that this management will create value over a period of time. In large-cap, there is lots of information available, there is lots of historical background available. But when everything is in price and you buy it, your returns get restricted or moderated. In mid-caps, you have the opportunity of backing your conviction, trusting your management, doing your homework, and be ahead of others in terms of information advantage. And that's where you end up making more money. This conference is a platform where we allow mid-cap companies to interact with investors and vice versa.
All right, just one more question from my end then. It's soon going to be the beginning of a new year. We have the Fed rate meet, which is this week. Perhaps there's expectation of a rate hike. And of course, domestically, we have these state elections, which are ongoing. So in that backdrop, which are the top themes that you're backing?
So one big theme which is worth backing not only in next year, but years to come is disruptor versus disrupted. We are seeing technology and other forces creating disruption in business environment, and sooner than later it will start getting reflected into markets as well. In every single company, in every single sector, you'll have to ensure that you are on the side of disruptor rather than disrupted. Not that every single disruptor company will be able to give you return, but if you are in that side where bulk of the companies are disrupted, your chances of outperforming market increases significantly compared to investing in those companies whose businesses are getting disrupted. So the big theme for 2018 and onwards will be disrupted versus disrupted.
And which name is seeing the maximum amount of traction? If you could tell us the sector, disrupting versus disruptor. You have a whole host of companies coming in. You have Quality, Varun Beverages, Water-Based, Dollar Industries, GHCL. Which one's seeing the maximum interest?
I really cannot talk about the companies, but today disruption is not restricted to one sector. In financial services, fintechs are disrupting existing business models of banks, insurance companies, mutual funds. In manufacturing, 3D, artificial intelligence is disrupting traditional modes of manufacturing. In services, robotics is disrupting human way of providing services. So there is no sector which is outside the influence of technological and other forces of disruption. one will have to be very, very careful in evaluating future environment of business, because when we are paying 20 times forward earning, clearly we are taking into account next 20 years cash flow. And if disruption is not going to be absorbed by the company, then they may not remain in existence over that period of time. So it's not sector specific, company specific, it is across. And in your portfolio, you need to have companies and management which is cognizant of disruptions unleashed in future and which are taking appropriate steps to ride on the wave of disruption rather than remaining, subdued and getting disrupted.
All right, Nilesh, we'll leave it at that. We'll let you go enjoy your conference. Thanks very much for dropping by, and thanks very much for your new ideas as well. Thanks very much.
Thank you.
So that's the word coming in from Nilesh Isley, one of the best fund managers, and as always, full of new ideas. Disruptor versus disrupted be the key theme, and of course, indie coins.
Indie coins.
Who would have thought?
All right, so on that indie coin note, we shall wrap Chartbusters. Stay tuned to CNBC TV 18